This episode is proudly presented by PHL Capital Corp, your strategic private lender offering first and second mortgages in major urban centers of BC, Alberta, and Ontario. PHL acts as your strategic partner in a market that demands quick action. They offer same-day feedback and commitment within 24 hours. With straightforward guidelines and clear communication, they take the guesswork out of alternative mortgage lending. Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by a Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with a Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. All right, we're back for another episode of the Mortgage Broker Podcast. Today, we're going into the Behind the Lender series with PHL Capital and special guest Steve Ponte, who is the CEO of PHL. Steve, thank you very much for joining us. Appreciate it.
Thanks for having me, guys.
Yeah, maybe we can just get into a bit of an introduction to yourself and you know the overview of the institution that we know as PHL Capital.
Yeah. Well, again, thanks for having me on. So again, Steve Ponte, CEO at PHL. You know, PHL was started in 2006. We're coming up very close to 20 years being in business. We started as a little project when we were at Toronto Dominion Bank, and it started out as a little investment club, and it ended up turning into a business now with just about $1 billion in assets under management. And what we do is we provide alternative mortgage solutions for mortgage brokers, and also provide investment solutions for the investing public.
Wow. I mean, I got to ask, just that TD piece, where did you guys catch on to private lending? Where did it all come from? How did that start?
When I was at TD, my business partner and I worked on a portfolio together, fresh out of university, my first professional job. And it was there that we got exposed to mortgage investment corporations or alternative lending. In fact, I'm a finance background, I didn't even know what a mortgage investment corp or a MIC was. Yeah. And we were providing small operating lines of credit to our space. And I thought, boy, this is an interesting business. It provided solutions and a way of lending of which I wasn't accustomed to at the bank, because it seemed like they were using common sense in terms of how they were lending. And on the flip side of that, they were also being able to provide, fairly above average returns for investors. So it was a really, really unique opportunity. We got some exposure at the bank, and that was kind of where the seeds got planted for a business.
Yeah, I mean, that makes a lot of sense because your focus at TD was on the commercial side of things. So outside of giving those lines to like MICs, was that the primary focus while at TD, or what else were you?
We supported a variety of different businesses, what we call general industry. So obviously there was some real estate, there was manufacturing, logistics, all types of different industries, and MICs just happened to be a portion of that portfolio. Like, to put it into perspective for you, a large MIC at that time in Canada, certainly what I would call our competitors today, like some of those MICs, like they might have been 25 million, and that might have been a big MIC back then.
Yeah.
That's how young the industry was when I got the exposure at the bank.
So founded in 2006, but operational in 2007. Is that correct?
Yes.
So specializing in the alternative side, where was the differentiator between commercial and residential? Given your commercial background, I know you do both at PHL. Yes. Like, how do you decide what?
It's really interesting because at first, it's quite interesting because you would think that when talking to most brokers, which we talk to on a daily basis, they would probably think that commercial deals were a bit more complex than residential deals. But given our background was in commercial, it was actually a bit of a change of pace for us to start doing residential. So there was a bit of a learning curve for us to learn the residential piece. But after a little while, we figured it out. So, we had exposure to both industries and both asset classes at the bank.
And PHL is comfortable doing commercial lending when it comes to, like, let's say development, like where I know we've gone to you in the past for land development deals, those sorts of things. So you have that comfort. Is that still part of the appetite?
Yeah, it's a space that we're very, very comfortable with. And in fact, I would say that we're naturally comfortable in that space. Yeah. So it's, it's been a good part of our business, as the residential has been too, but it's not one we shied away from, for sure.
And that's rare, right? Like, you don't typically see a MIC that is so comfortable in both sides of the industry, because it's not only just commercial development, construction, residential, second mortgages, right? Like you have truly like a full suite of products, which typically from my experience, people really specialize in one or the other. They might dabble in the other one if their primary focus is, residential.
Yeah, and we have to be careful. Obviously, you never want to be it's difficult to be a jack of all trades, but we found that that's been a value add for us for our brokers because they get a variety of different types of deals, and we can be a kind of a first phone call or a first email for them in terms of a solution for them. So
yeah.
Well, especially with the loan size too, right? You get into these commercial properties, we're getting into much larger loans, and you have the appetite and the experience for that. Would that come from the banking background as well? Just the ability to kind of look at a bigger deal and assess the risk, or does that have maybe talk about that?
Yeah, I would say, I mean, even to this day, PHL Capital is doing loans in excess of 30 million in terms of loan size. What I would call today really that mid-market space, but the dollars, they're not. They don't worry us. In fact, I would actually argue, as you start to get to some of the larger dollar sizes, you tend to see some more sophistication from the borrowers as well.
You'd have to.
You hope, anyways.
Yeah.
Again, because it's a space that we've had so much experience and put in so many reps in, it's a space we're pretty comfortable with. So
yeah.
How does a banking background drip into your influence in leadership and just the corporate structure? Because I look at you as an institution. You're run like a bank, which in all the good ways.
Yeah, the important part for us to remember, and which we always do, is despite our growth and the size that we're at today, there's a reason why borrowers and brokers are coming to us, because they don't need another bank. They need something different than the bank. And it's really interesting when you're smaller, you can be a lot more wild and loose, if you will, on the way you underwrite. And as you get larger, you naturally gravitate towards policy and procedure that gets getting towards the direction of a bank. But we've got some checks and balances to make sure that we keep going back the other direction, to make sure that we keep that entrepreneurial spirit in the way we underwrite and ultimately approve deals. So.
Like, I do bring that up in the best way possible, because there's just a corporate polished, sense of dealing with it, like big mix like yourself. And again, but it is still an unsophisticated space, if you, in a sense, like there is a lot of small mix out there, and you might get a 24-hour turnaround time to a 4-day turnaround time. And then like just being able to deliver the consistency comes from corporate structure, right?
Yeah, again, Dean, it's something that we monitor very closely, because as we get bigger, we don't take ourselves too seriously. I'm sorry, in the sense that we never want to become too corporate, because we have to remember who our customers are and why they're coming to us, and that's something we have to maintain and stay anchored to, because despite the growth, we want to make sure that we still have that kind of grassroots, ground level feeling. And really have that entrepreneurial spirit that both our brokers and our customers have. So it's a balance at times, and sometimes you can gravitate and lose a little bit of sight of that. But we've got the right checks and balances in our organization to not forget that, because that's ultimately what I would say that's one of the main ingredients for the success that we've had, and we never want to lose sight of that.
Maybe just touch on some of your personal motivations. Like, you touched on what drove you into this space. What inspires you with leadership at PHL?
Yeah, when we started in the space, again, PHL really started almost as an investment club. Some people that wanted, a group of 20 people that wanted to put some RSPs together, and we ultimately saw a big change at the bank. In fact, at that stage in the game, there were a lot of the major banks in Canada were involved in equity lending, and the banks got rid of it, and it was a hugely successful program in Canada. And that was really the nudge off the ledge, if you will, because we were like, where are all these borrowers going to go?
Yeah.
Thankfully, fast forward till today, it was a good bet. But really for me, what the opportunity for me was, I was, despite having the experience at the bank, which I really enjoyed, I really did enjoy working for a major Canadian bank. I learned a lot there about policy, process, procedures, really learned a lot about credit there, which is invaluable for what we do today. But deep down inside, I was entrepreneurial at heart, and I really saw an opportunity for me to try to build something on my own. I was young, didn't have a family at the time, so it felt like it was the right time to take a risk, and here we are.
Yeah.
Well, I mean, you've clearly found your groove in the industry, right? And my head just goes to curiosity. Roughly how much money did you guys have when you started, and when did you really find your groove? Because, like, to go from whatever the number might be to $1 billion now, there's clearly, you guys are doing so many things right, and we know that personally. But I'm sure the listeners would love to hear some.
I can tell you exactly what the number was. We started in 2006. And our assets under management was $635,000.
Wow, what a journey.
We weren't doing first mortgages at the time, as you can appreciate with that amount of money.
Yeah.
We were doing really small second and third mortgages at the time, deals we would not do today, because we had to spread that very little amount of money around, which also made us polished, because we had to be we had to really understand our deals. We couldn't,
careful, yeah.
We had to bat 1,000, because if you get one deal wrong, you're out of business. So, but Derek, to get back to your question, it took us a while to really get some critical mass. Like, I don't think until we got to even 2013, I think 2013, we were at 10 million in assets under management. Wow. So it was the proverbial kind of flat sideways growth, and then
interesting.
Wow.
And then it started to take off after we had about 8 years of kind of good track record for our investors. That's when things
for sure
kind of really started to pick up for us.
That's cool.
And also the industry picked up. It wasn't.
Yeah.
When we started in the business, nobody knew what a MIC was. Nobody knew what this alternative space was. And today, like, you can walk to anybody on the street and they almost know what alternative mortgages, or they can name a competitor or us in the space.
Well, even financial advisors can sell MIC products now, right?
That's right.
Yeah.
So
it's a great point. Like, just looking at your overview, the differentiators of the of PHL, like, maybe you can describe your lending philosophy, some of the core services, and how it serves the needs of brokers and investors.
Yeah. Just to break it down, Dean, ultimately we lend in both the residential and commercial space. So industrial, retail, commercial, residential. So every asset class in the residential space. We also do construction in both residential and commercial. And I know a lot of people also know us for kind of land development, being in that space as well. So we've got quite a large spectrum of kind of asset classes that we lend against. But ultimately, what I would say differentiates us is again being anchored to that common sense lending. I think we've really tried to stay anchored to that. That will always continue to be our North Star in terms of how we lend, is to, regardless of how big we get and policies and procedures which you need, does this make sense? Because in a world where nothing makes sense anymore, common sense is really valuable. And I know it's something that our customers tell us why they like dealing with us. So it's not something we're prepared to get rid of.
It's a good point, because, like, the bigger some of these mix that we're familiar with, whether it's in BC, Alberta, Ontario, where we operate, the bigger they get, they do lose that common sense. I have noticed that, and that certainly is something that you're known for. And also speed, flexibility, comes with that common sense factor. But, like, what else would you say is a unique value proposition of PHL?
Yeah, I think one of the things that relationships really matter to us. I mean, thankfully we've got a great relationship with you guys, and congratulations again for your guys' success. It's awesome for me to watch guys like yourself really, having the success that we did earlier on, and you guys are doing huge things now. So again, my hat goes off to you guys.
Appreciate it.
It's really fun to watch. But relationships matter the same way it does to you guys. Common sense lending, relationships. We go the extra mile for our customers, and when our customers go the extra mile for us, we go 2 miles for them. That's taking that type of approach in the way that we operate on a daily basis. I'm sorry.
And I know you replicate that on the other side of the business, which is the investor piece, right?
Yeah, at the end of the day, we have a fiduciary duty to our investors to make sure we're looking after them. We have investors that have 30, 40 years of their hard-earned money with us. Not all of it, but a good portion of it. And the decisions that we make on the lending side has real implications for their retirement, or they're buying a house or investing in a business. Um, as a CEO in the business, these are things I don't take lightly. And not only just as a CEO, our from the person at the front door to my desk, everybody understands that in our business. We have a duty to make sure that we protect this money, but also trying to find a balance for our brokers and our customers to find a solution for them.
I didn't include this in our notes, but I want to ask you this. So I've been to your investor presentations, and you take a very transparent approach to those meetings, which I really appreciated. I actually learned a lot through that, and just how you communicate to investors, because it was very eye-opening for me, who's not in this space, just being a broker. Investor relations is a real deal, and there's some challenges there. Like what would you say is your biggest challenge from an investor relations perspective?
The same way our brokers are coming to us, our investors are coming for us because they want something different. Yeah. They want something different than what they're getting currently at their bank or credit union or other financial institution, which doesn't feel warm and fuzzy anymore. There's a couple things that I would say that differentiates us on the investor side. Is one is, I think, just the stability of the returns that we've been able to generate over our track record, and the industry as a whole. We've got some great competitors that do a great job and really do a good job looking after their investors. The other differentiator is, and Dean, you've probably heard me say this at our meeting, is I've told our investors that, as a CEO in the business, I'm responsible. I'm not going to blame the market. I'm not going to blame this volatility. At the end of the day, the buck stops with me. And if there's an issue with respect to their investments, they need to look no further other than myself. I'm responsible for what happens with their money, and it's a huge responsibility that both I don't take lightly, and neither does my staff. And I know that our investors really appreciate that, and they like the fact that there's ownership and there's responsibility, and somebody is taking ownership of what's happening with their money. And ultimately, the proof's in the pudding. Performance has to be there. So I hope that answers your question.
No, it totally does. Yeah, like it was just really eye-opening just to see, especially when you open the floor and let those folks start flying with their questions, and everyone's here and everything, and you handled it perfectly. I learned a lot just how to approach a room like that from yourself.
As you can tell, those were not seeded questions. You got to take the good, the bad, and the ugly. But I that's also another thing that our investor night that we do on an annualized basis is something really special for us, because we talk about transparency in our business. What better way to be transparent with your investors than to have everybody in the room? We've got our auditors there, our bankers there, some of our brokers are there, and we don't have a seating plan. You can sit wherever it is that you want. So we've got some of our investors that are sitting with our bankers or sitting with our auditor, and nobody's monitoring the questions that they want to ask, and it's great. We love that. It's fully transparent for them, and I think that gives our investors a lot of comfort knowing they can see leadership, they can see my team, they can see all the stakeholders in our business, and that level of transparency is very difficult to find anywhere else. So it's something that we're really proud of.
Yeah, you should be. Like, that's how I felt walking out of that room, is comfort, So
Thank you for that.
Absolutely. So maybe shifting to current market trends and just some insights, like where do you see things going? Maybe some of the current movements in alternative lending, just the broader mortgage markets.
Yeah, I think I think the alternative space is a space that will continue to grow. I think as banks continue to perpetually tighten screws, and they can't get out of their own way with respect to policies, procedures, and those are good things for us. And people are, as you know, guys, they don't always fit into a box, and sometimes they need a different solution. And I suspect that market will continue to see what has happened in the last 20 years continue going forward, and that's our space will continue to grow and still maintain a healthy position in, we won't see what happened in the US, but we'll maintain a growing and a decent, healthy space in the over financial spectrum. So, but in terms of mortgages, I would say, it's a challenging time out there. I think the market is in a place of flux. We've got what's happening down south, that's creating some uncertainty here in Canada. We've got a political uncertainty, obviously, on a federal level. In fact, we don't even have, the government's not even sitting. It hasn't for some time, and I think, I would say my experience over the many kind of challenging periods of time that we've seen is when things get really challenging like this, people just stop and they don't do anything and they wait to see which way the tide's going to move before they ultimately react to that. I think thankfully that opens up opportunity in our space that we ultimately get a chance to help customers that, again, where the banks are not as supportive in times like this is a time for us to really shine and really help our customers out.
Yeah, I mean, we've been screaming this from the rooftops for the last, 6, 8 months. Not only are banks constantly tightening, but we're also seeing more competition from the banks, making it harder for brokers. And, pick 10 brokers, I'd bet you that 9 of them built their business on prime business, right? So unfortunately, there's a huge proponent of our industry that's not familiar with alternative and private. And we're doing everything in our power to make sure that our brokers have a good handle on private lending, alternative lending, who you should be working with. Because if I truthfully think if you're not well versed in that space, first of all, you're doing your clients a disservice. Second of all, you're going to have a tough time being successful in this industry. So we're starting to see more and more of that through phenomenal agents, right? And even newer agents are really starting to pick it up. And, a lot of people look at private lending like it's a terrible thing. Like there's a purpose for it, right? And it's a need that will never go away, in my opinion. And it's good to have partners like yourself that do it right.
Well, we appreciate that. And we make sure that we're taking time, especially with new brokers. And, we're thankful to guys like yourself that really understand the space and are providing that mentorship to your brokers and to industry. I think, over the years, there's no question our space has become much more accepted. And that's just a function of just exposure and people, getting used to dealing with firms like ourselves. And the space has really grown. And, our industry has really matured over the course of the last 30 years as well. So, one of the terms I hate is shadow lending, and that certainly isn't descriptive of certainly our business and not our competitors. I mean, we're right out in front of everybody and really supporting brokers and finding good solutions for our borrowers. So.
And like you said, I mean, the proof is in the pudding. Look at how big you've grown, let alone the industry. That tells me investors are finding comfort, not only because of good return, but they find comfort in the actual product, right? And I've always had that feeling, but I also know the industry inside and out. I'm sure most of your investors are not mortgage brokers or realtors, right? Like they're average consumers that are, like you said, investing in their retirement. So like that's a huge piece as well as
Yeah, it's really interesting, Derek. If you look at who our investors are, I would say less than 30% of them are actually even in the real estate space. Like they are from a wide spectrum we have teachers, dentists, lawyers. It's a really big swath of kind of the general public. And
Sure.
Whereas to your point, Derek, 10, 15 years ago, it was probably more people that had some kind of real estate background because they understood the space.
Yeah, that's interesting. And like just talking about like the shift in the mortgage market in 2023, I remember this so clearly when we did our E&O policy at the end of the year. We were 10% private alternative combined. 2024, 33%, and we did a lot more volume. So it's pretty massive shift, and that's part of what we're talking to our brokers about daily is like, if you're not aware of this space or you haven't been playing in this space, which would be crazy to think, but if you're just focused on prime, I mean, you are definitely going to be behind.
Well, the thing I think that's really important to mention, it's not private or prime. In most cases, it's both. It's listen, most people that come to us through the brokers, they're not coming to us, and that's not the destination.
Yeah,
we're a part of the journey in the sense that they're coming to us to ultimately get to that destination. Hopefully it is with a prime-based bank. We don't want our borrowers to be with us for an eternal program. They're coming to us for a short-term need, whether it's 1 month to 24 months or 36 months. And then from there's a plan. There's a plan in place to ultimately get them to cheaper source of capital, which is the bank or credit union. And that's really where guys like yourself and your brokers are really, they're coming to you as advisors to help them, structure that journey to get into that place.
Yeah, completely. Has this had any impact on your practices, like when it comes to product structures, borrower profiles, or just broker relationships in general?
Yeah, I would say that, the industry's evolved, and there's been changes along the way. In fact, I would argue when we started this business, the people that were coming to private lenders, I bet you here's the biggest change I would say. When we started our business, I would say the overwhelming majority of borrowers were probably had beacon scores of 500 in the fives or less.
Yeah.
This might throw you guys off, but the average beacon score of our borrowers today is 730.
That's amazing.
And so the nature of the borrower has changed. And again, they can't meet whatever criteria it is in the bank that they need, or maybe it's a function of speed. They need the money quickly for a short period of time to find a solution for what it is that they need. But there's no doubt that our business has evolved and changed along with the market.
Well, I mean, I remember doing private deals, 8 years ago, and with a lot of lenders, you could go send an app, no docs. They didn't really care about credit. It was just, they wanted to know a bit of a story and that was it. And, not that that's changed significantly, but there's more proof required now, right? Lenders are being safer. They want to get to know the borrower. The exit strategy, like you talked about, is probably one of the biggest pieces. First of all, how are you going to make your payments? Second of all, how are you getting out of this, right? And I think, it's a very good thing for the industry, because if we stayed on that path, to your point, you get the borrowers that, unfortunately are in that position and they might not be able to get out.
Yeah. I mean, I look at PHL. I mean, I would definitely say that we are limited in with respect to how much information we're asking from brokers and clients. We're typically not asking for bank statements or income verification. We are really asset-based lenders at the end of the day, but it's really important for us to understand what the story is. What's the journey? Why are they coming to us? What solution are we providing? And ultimately, what's the destination? Even more importantly is our relationship with guys like yourselves and your team, and having that good relationship to know that they've got quality advice and there's a level of trust. The relationships that we have with brokers are extremely important to us, and that ultimately helps us be more flexible in times where we need to get more flexible. Is if we've got a good relationship with the broker and we've got a good experience with them, we're going to bend when we need to bend. So.
Yeah. Hey everyone, Dean here. Quick timeout from the episode to share with you the ABW Tuesday Mortgage Memo, your weekly market highlights sent directly to your inbox every Tuesday. This is certainly one you're not going to want to miss, so make sure to sign up now. You can do so with a link in the show notes, or you can head to joinabw.ca and sign up there. This is a high-level summary of market developments, regulatory updates, and housing trends every Tuesday. So hope you enjoy it, and back to the show. One thing on exit strategies, because I found that was such a key component before, let's say, the last 24 months. And now in the last 24 months, things have changed so significantly with qualifying at a bank or a prime lender. Does the emphasis on exit strategy maybe change a little bit now than it was previously?
I think it has for different lenders, Dean. I mean, when I say exit strategy for our company, we don't need certainty with respect to that exit strategy, but we need plausibility. And what I mean by that is, here's the plan. This is what we're trying to get to. And if we can throw that against the wall and it sticks and it makes sense. For example, if you tell me, Steve, we're going to pay you out in 3 months, but the borrower's got a 450 beacon score, I think we've got a problem. There's some holes in the story.
Yeah.
But if it's, we need to rectify some unsecured credit, get that all taken care of, put a mortgage on, clean that up for 6 to 12 months, improve some credit, and then go to the bank. Yeah. That sounds like a plausible exit strategy to me. Yeah. That's one that we can get behind. And again, also, what's our relationship with the broker? Does this broker have a track record of doing what they said they were going to do? Yeah. I don't need certainty, but I need to have confidence in that broker and that relationship, and that they're going to be able to execute.
What's maybe just touch on the regulatory and economic outlook. What's your perspective on inflation, interest rates, and just new policies affecting brokers today?
Yeah, I mean, compliance. We'll talk about compliance first. I mean, compliance is quite interesting in our space right now. We've seen in my career in this space, the change in compliance has been dramatic, in the sense that we went from very little compliance, almost even on the lending side and the investor security side, to now where we've got full AML on both sides of the business. We're across the country now. We lend in 3 different provinces: BC, Alberta, Ontario. So we've got 3 lending regulators, and we're currently in every English-speaking province on the investor side, soon to be in Quebec as well. So we've got, I think 14 or 15 regulators that we have to deal with on a regular basis. So as you can appreciate, we've invested very heavily in compliance in our business, and you're starting to see some changes there. You're starting to see larger competitors like PHL starting to break away from the pack, and a function of that is simply a cost of compliance. I think the same way that you're starting to see credit unions we've seen what, 2 or 3 different mergers over the course of the last 24 months. I think most recently Coast Capital announced that there was a merger coming as well. You're going to start to see some of that in our space as well, and it's a function of cost of compliance. At the end of the day, compliance is not, we don't look at it as a necessary evil. At the end of the day, the regulators are really trying to protect the consumers, and we shouldn't be against that. But we need to make sure that we're able to not only communicate that, but also be able to execute and to make sure that we've fostered a business of compliance, but also making sure that we've stayed nimble enough where we can, provide solutions for our customers.
Yeah, I mean, we've learned a lot about this in the last couple of years as well. I mean, AML, FinTrack coming in, and as a broker for the last 10 years, compliance is something you never really wanted to talk about. It's not fun dealing with it, processing it. But from the brokerage perspective, we're really trying our best to instill a culture of compliance to make it a positive, because at the end of the day, we're protecting ourselves and we're protecting our brokers and their consumers. And, it's interesting. We didn't think our brokers would adapt to these changes as well as, we wanted them to. And interestingly enough, everyone's been very positive about it. They've really kind of adapted the culture of that, and they're happy to communicate that, right, as they need to. And there's a lot of competitors in our space that have taken a lackadaisical approach. And our concern was people could jump ship and go over there because it's easier, and we've seen none of that. Like they're really starting to understand the culture of it and the purpose of it, right?
Yeah, I mean, I look at compliance and say, those that are continuously going to go against the grain of compliance, they're not going to survive.
100%.
I think the key for us is, how do we make sure that we foster a place in an environment that we are, compliant in everything that we do, and not only being okay with that, really embracing that in our organization, but also making sure that we're not losing sight that we also have a business to run. And I think this is where some organizations, and ultimately, to some degree, maybe the banks, this is where they get lost. They get so ingrained on the compliance side and policies and procedures in the business that they forget there's a customer on the other side of it. I'm certainly not saying to avoid or shun the compliance piece, but remember there's a customer there that you have to manage that experience at the end of the day, which you guys know.
Totally. Maybe jumping into some of the behind the scenes operations, especially around team structure and workflow. Like, what does a typical day look like for the underwriters, the team, especially around, how to handle complex deals?
Yeah. Great question. Our team is, I would say our brokers or our underwriters on an average day are working very closely with our brokers and our customers, making sure that, they're available, that we're quick in response. Speed is so important in our business, as you guys know. It's one thing that's gotten very competitive. We've got deals that we're turning around in hours, not versus days. So I think a lot of bankers really don't understand our space when they see how quickly commitment letters come out of our office, and even for some of our competitors. But speed is really, really important. So making sure that our machine continues to foster and understand that despite the growth, we need to make sure that we can still continue to meet those expectations, because that's ultimately what's made us successful to date. And we can't lose sight of that. So, making sure that they've got someone that they can speak to right away. They can ask questions and they're going to get a response. Maybe they don't have all the information right away, but we can give them a pretty high level and a good response in terms of what a structure on their deal might look like. Dean, to answer your question with respect to how do we deal with complex deals, again, we've really fostered a team environment in our space. So behind the scenes, if one of our underwriters is getting stuck on something, they're going to talk to either the other underwriters I've always got an open door policy. So that's where the learning happens.
Yeah.
So, I would say that even to this day, I'm still learning stuff. I don't know everything either, but with a lot of thought and discussion, we tend to make decisions quickly. But if we made a decision on something, we're going to continue to support that.
I mean, that's a great segue, like just decision making and what factors influence approvals, and how does PHL approach, let's say, gray area deals?
Yeah. It's those the extra things that are really important to us. So, I mean, anybody can approve a deal in our space that is, a single family home, 50% loan to value with a 800 beacon score, and somebody just needs to file their last taxes. Like those are no brainers. It's the deals where that get in the edge and in that gray space that, what really matters to us is, again, what is the plausible exit strategy? Does that make sense for us? Who's the broker that sent this deal to us? Is this a new broker that we've never heard of from before? If you've got a deal from BC, but there's a Manitoba broker, maybe there's a good reason for it, but maybe there's not. So it's those extra things that really come into play for us, where we get into that gray area is, again, plausibility, exit strategy, common sense lending. I can't stress that enough for us is this logical? Like, is the story we're getting logical? Does the exit seem logical? And if it's common sense, it's a deal we're going to do. So we try to get rid of the noise in some of these things and really get it back to kind of grassroots of what the deal looks like.
This is a bit of a sidebar question, but to that point, foreclosures are always the worst case scenario in private lending in the MIC world, right? I know your numbers are great, so I don't know if you're comfortable talking about that, but that's kind of proof in the pudding type conversation, right? Do you know, like, is there an average of or a percentage of deals that go into foreclosure?
I mean, foreclosures, I would say in our history, at least, they've ranged from as low, close to 0%, as high as 6% in some cases. We've had very, very little loss in the course of our history. And I like to think that, despite our quick turnaround time, it's because, again, of our common sense lending. If we're lending with a plausible exit strategy and loan to values make sense. There's been a few rough ones we've had, but we're in the lending business. So we've had some challenges.
Right? It happens to the banks.
But I can't stress enough on foreclosures. Again, I keep coming back to relationship, how important that is for us. I have something that I always tell my kids that, the proof is always in the pudding, and when someone shows you who they are, believe that. And we've got some really tremendous relationships with our brokers, including you guys, in the sense that, listen, if we've lent somebody some money, the ownership of that is us. We don't expect our brokers to get us out of that deal. It's our responsibility at that point in time. But I find that the majority of our good brokers really do want to try to get involved and help us find a solution for some of those. The expectation's not there, but it's really interesting to see how some of our good partners react in those situations. So
it's a great point. So, like, from a risk and compliance perspective, how does PHL assess like an unconventional borrower and stay compliant with the evolving regulations, especially around FinTrack?
Yeah, I mean, it's constantly evolving. One person such as myself, it's very difficult to be in every facet of the business today, given the size that we are. So we've hired some really tremendous people that work with us in part of my leadership team through our compliance group, our underwriting group. And those teams work really, really well together. My leadership team and the rest of our teams, for that matter, are engaged and work a lot together. So they really have an understanding of, the responsibilities that person has, whether internal or external. So I think really having some insight into what their coworkers and other employees are doing and having some respect for that, that's made that transition a lot easier, I think, for our group, because it's not like, oh, well, why are we doing this? Because, compliance is on me for this. Well, they really have an understanding of what the new rules are from compliance, so they know what that person's job and responsibility is. But really, we take that back as an organization and decipher and really kind of unpack that, if you will, to understand how we're going to react to that change and how we're going to react to that as a business. So everybody's bought in, everybody understands. The left hand knows what the right hand's doing. yeah, change is difficult sometimes, but ultimately you get through it.
Yeah.
So technology and innovation has been such a hot topic in our space on the broker side lately, especially around AI and just how that's impacting our business. How are we talk about this a lot. If you're not using this, you're probably going to be replaced, by the folks that are. Aside from the fear that AI is going to replace us in the mortgage space as brokers, I don't believe that. But like, how do you look at AI and just any general tech and software in your business? And are you starting to consider this?
Yeah, great, good question. Interestingly enough, both tech and innovation are, as part of our overall business plan and strategy. Innovation is one of our key pillars of our growth strategy going forward, and technology obviously plays a part of that. Technology is an interesting one because I think we think about not only technology from an efficiency perspective and a scalability perspective, which certainly it does. I'll come back to that, but also from a risk perspective. We keep talking about technology and AI. Yeah, there's some great benefits, but there's also there's also a dark side of that, in the sense that the fraudsters also have the same access to the same technology.
Yeah.
So it's really staying on top of that on both sides of the fence, and that's really a job that I have to do, is making sure that not only am I protecting our business from a risk side of the technology, but also making sure we're taking advantage of the efficiencies. Innovation is something that in order for us to survive, the world keeps changing so quickly today. If your business is not focused on innovation and keeping up with what's happening with technology and what's happening in the world today, you're going to get left in the dust. And the speed at which that is happening is such that there's real risk for a business that don't have the ability to adapt quickly. With respect to PHL, yeah, technology has been a big one for us. We've spent the better part of the last 3 years really making some fundamental changes in the back end of our business with respect to technology. It wasn't that long ago we were managing our portfolio using Microsoft Excel. Great program, really difficult to scale, and a lot of opportunity for data errors, human error.
Yeah.
So really focusing on technology that's going to help us to continue to scale and grow in our business, and also provide some level of flexibility. So as our business and world change, does that technology have the ability to grow with it? So yeah, definitely. I also want to touch base on one other thing on AI. AI is a real interesting one in our space, because while some industries are really taking advantage of that and really taking advantages of the opportunities that AI provides, we are somewhat anchored in the sense that what regulation will allow us to do.
Yeah.
As you can appreciate, especially if you've got open AI, you can't apply individuals'
Totally.
client data in open AI. So there's the regulators the world's changing so fast. The regulators haven't really, come to grips with how this is going to affect our business. So there still seems to be a little bit of lag in our business with respect to it. But I mean, we know which direction this is going. So it's one that I'm excited about. We as an organization, and we touch on this on our innovation in our business, is we like to just play around with AI within our business just to see, try different things, and it's remarkable what it's doing.
Totally. Yeah, it is. It is quite fascinating, like what it could be, what potential it has. But again, like you start putting bank statements and client data into open AI, I mean, you're going to have problems. Yeah.
Yes, but you can also see the advantage of it. Think about,
100%.
think about 100 applications coming
Yeah.
in, and being able to, disseminate that information into meaningful packages of output. It's attractive to think about.
Yeah.
We're not there yet, but we're getting there.
That actually leads into a good question I have around just your priorities, like lender priorities, especially when prioritizing deal flow and how broker loyalty is rewarded. Like is that a factor?
Yeah, I mean, broker loyalty is really important to us, as I mentioned. I mean, the reason where we are today is because of the great relationships we have with our brokers. It's something that we monitor. First off, we collect the data, and we're also improving on this with respect to making sure we have really good, thorough, and current data on who's sending us business, are they good deals? Are they ultimately, have lots of foreclosures? Was the foreclosure because of, what was the reason? Was it because of the borrower, or did we get bad information? But those relationships are very, very meaningful for us in terms of priority. The other part too for us is speed, and when we're getting deals from brokers, speed is paramount for us. In fact, I'll share a recent change with you guys that we've implemented in PHL recently. As your business grows, and you guys will understand this, you guys have got a large business now, and you have that many people to manage. You get a few steps away from where the action is happening, and sometimes it's hard to understand what's happening on the street. And it came to my attention that sometimes our turnaround time was getting a little bit longer than what we had expected. So we made a change most recently that if a deal's been sitting in our inbox with our credit committee for longer than 2 hours, I personally get an email.
Really?
Oh, wow.
Well, lo and behold, there's no more deals taking longer than 2 hours anymore. So sometimes
funny.
you just need to make changes like that along the way. But again, not being too big for my own britches to make sure that that's where I like to be, where the action is, but also have a business to manage. So
For sure.
it's an exciting time.
I like that.
2 hours is phenomenal, by the way.
Yeah. We have to compete.
Yeah.
Maybe just a bit into the broker lender dynamics and some of the client focused insights. Like, we talked a lot about the broker side, communication, relationship, big pieces. What are some of the resources or training that you're considering or doing from a broker perspective?
Yeah, we are definitely taking more opportunity to not only internally within our underwriting team to make sure that we don't lose sight of the way we do things at PHL. We've been focusing a lot of resources and both human and financial resources into investing into training for our group. We're taking that a step further now as part of our innovation strategy within our business to take that outside of our walls. How do we help our brokers help us and our customers help us?
Yeah.
So we're going to see some big changes from us in that regard over the not only going forward here, but in the near future, but as well as going forward. It's we're going to be rolling out a series to assist our brokers on helping train them, not only just for our business, but just to help understand the space as well. Really help you guys do the job that you guys need to do. So you guys are doing a great job on it, and I know that the feedback that we're getting is any support that we can do or provide is going to just be helpful for that.
Yeah, and we've been, we have such a great relationship with your group, and we're working closely with Aaron on our own educational component with PHL in a better way. And we'll be dropping this news shortly, but an upcoming event that we're collaborating with you just to educate our team and then get the social aspect of it as well. But that's just been such a big shift in this industry where it's gone from parties, golf tournaments, which are great and fun, but still having focus on educational it's been definitely the biggest demand that we get from our team is like, how can we be better? What where can we learn more? And so we thank you for that for jumping up to the plate.
Dean, I couldn't agree with you more. It's really interesting as we're starting to really understand even our employees and getting feedback from them. Our employees want a place where they can continue to learn and develop and become better at what it is that they do. And we have a responsibility to help them as their employer and as a business, that we can't lose sight of what made us a great business, and also to make sure that we're sharing that with our team so that they can continue to, hone their skill and get better at what it is that they do. So I love seeing that. I love that that's the attitude from our team, and it sounds like you guys have the same thing. Yeah. But when you've got a team that wants to learn, grow, and develop and wants more information, I mean, that's how you have real success.
Yeah, 100%. This is one piece that I really don't have much of a lens on, but borrower experience, like, what is the feedback that PHL has received and has, from the results of that? Like, have you, taken that and then made improvements or any changes just simply from borrower feedback?
Yeah, I mean, we have to understand our customer at the end of the day. It's really interesting. Sometimes the question comes up, who's our customer? Is it the borrower or the broker? 95% of our deals come from the broker channel. The answer to that is they both are. Yeah. So we really need to understand what the broker experience is with us and play to that. But we also have a duty to our customer, which is the borrower. So really understanding what it is that they want from us. And what is it that they want from us? They're trying to find a solution. Some of them, some of them have not had any exposure into our space before. So really trying to help them understand that they're dealing with a business that's a reputable business, that we've got, we deal with banks, we deal with, large firms and, multinational type of firms, but really trying to make sure that we're trying to improve on that front. So, when our borrower calls us and needs a payout statement, we have one available. When they want a statement, we can get that to them quickly. So that hasn't been the experience in our space maybe 20, 30 years ago. But I think our industry has done a lot of maturing over the last couple of decades, and I'm happy to say that and we're part of that as well, of course. But that's because we've been listening to our customer. If it's a business that we want to grow and an industry we want to continue to shine more light on, you can only have continued success if you understand what it is that your customer wants.
Yeah, completely. Maybe as we look to wrap here, future outlook, is any emerging trends that PHL is watching in the next 5 to say 10 years?
I undoubtedly think that our space will continue to grow. I know we're in a kind of a weird time right now. But weird times will continue to happen. That's just the natural course of business and society. I would say that I'm an optimist. I'm a half glass full type of guy. I think Canada's a great place. It has a tremendous amount of potential. I think our space is going to continue to evolve, and I really do feel that despite some of the challenges that we're seeing, I think we're going to see a heightened sense of entrepreneurship, business growth, and kind of pulling ourselves from the bootstraps, if you will, within our economy. And I know that we'll have the opportunity to play a role in that, as will you guys. And I think that's going to provide a great environment and framework for us for a prosperous business going forward, not only for our borrowers, but also for our investors. So we're looking forward to that.
What's the strategic direction? Where is the company headed, and how will it continue to support brokers?
Yeah, again, we've been very focused on listening to our customers, and as I mentioned, the brokers are a big part of that. Our brokers have gotten very sophisticated. I look like groups like yourselves. I mean, you guys are, again, I'm so proud of you guys to see what you're doing and the expansion and growing your business. But we got to follow and keep up with you guys. It's not easy, but you've seen over the last couple of years, we've grown. We've moved into Alberta. We're in Ontario now. Maybe looking at a few other spots without tipping my hat so far. But we need to go where our customers are. We need to understand how their business is changing and evolving and maturing. And we also need to make sure that are we able to be there to provide those solutions there for you. So in terms of our business, I think our business will continue to grow, certainly across the country. Without saying too much, we are looking at maybe somewhere else in the near future, but I will leave that for another date.
Yeah.
And also our investor base is growing. We continue to provide a great opportunity for our investors, and our investors continue to invest with us and reinvest, and not only that, tell their friends. So we've had tremendous growth, as you guys know, on that front. And we're just very blessed as a business that we've had great partners to not only lend money to, but also great capital partners on the investor side. So my job is to make sure they all stay happy. So I think for the future that there's the sun will be shining on us to see a prosperous future.
Awesome. Well, okay, we got a couple more questions to wrap up.
Sure.
So, advice to brokers: what should brokers start preparing for now to stay competitive and adaptive?
I think the better you understand your customer, the more valuable of an asset that you will become. I think, Derek, you mentioned it earlier, where I know some brokers have really shied away from the private or alternative space and only wanted to focus on prime. Well, you look at the environment that we're in, you guys know that solution, while it is available for a lot of people, that might not get them to the destination that they want to go. There's some other steps in that might need to come in before that. So I would urge brokers to really understand the whole spectrum of the lending landscape, if you will, because that's how they become a more valuable asset and a much more valuable tool for their customers. So I would certainly stress that. I would also urge, borrowers, despite the level of speed at which we operate, I think that doesn't negate the broker's responsibility to make sure that they really understand their customer, understand what it is, what solution they're there to provide, really getting a good glance at what that journey will look like for them. What's the plan? Put that plan in place for them and have a really well thought out plan in terms of how they're going to provide that value for their customers. So the more that they can do to provide that insight and confidence and information to their customers, the better off they're going to be.
Yeah, bang on. One last question. What would you say to someone that wanted to start a MIC today?
Don't do it. No. What would I say today? It's a different landscape than it was when we started the business. I mean, you could, again, we got 20 guys together, 20 investors and started a little club together. I don't think you could do that today. I think there's with the level of compliance and oversight and the cost of that, there's much larger barriers to entry into the business. But you've asked me the question, what would I recommend to them is really have a thorough understanding of what all those responsibilities are. It's one thing us in the industry take great comfort in is the fact that we're keeping eyes on our competitors. And I don't mean that from, we're keeping eyes on the space in the function of, we want it to be a clean space. The last thing we need and the last thing you guys want is people doing things outside of kind of the rules and regulations that ultimately we're the ones that end up wearing that bad noise. We want to keep the bad actors out. Surround yourself with good people. I would say get good advice and, make sure you're dealing with good brokers like you guys.
And I mean, comparing to where you started, correct me if I'm wrong here, but at that time, from an investor standpoint, MICs were not as anywhere near as common, right? Like now, so many people are aware. I think from a capital raising perspective, it would be much harder than it was 10, 15 years ago because of brands like yourself, right, that you're competing with.
For sure. I'll give you a large distinction, Derek. When we started in the business, there was something called the Northwest exemption, which I'm sure some of your viewers will be laughing right now, but there was something called the Northwest exemption. So I could literally go to you with a subscription agreement for shares and say, tell me what the number is that you want to invest and sign here and off you go. Really? And there was no requirement for suitability, know your client, KYC, AML. There's all those things that, and this has been a good thing for our industry. I'm not suggesting while it was a wild and loose time when we started, the industry is where it should be today. We have a real good understanding of what it is that our clients need, our investors I'm talking about, and really having a thorough understanding of the regulation. So there's a lot of more consumer protection. As you guys know, there's been some challenges along the way. There's always a few bad apples in every industry, and we've had some big ones, unfortunately. And we share in a responsibility to make sure we keep those bad actors out.
Yeah.
I would say get good advice, deal with the best in the business, and keep your nose clean and do right by your customers.
That's great feedback.
This was great, man. Thank you so much. Like, there's some key takeaways here, and I think like the one that sticks out for me the most is just the importance on relationship. What I hear from you and all that you say is you care about not just your business, but you care about the industry, care about your competitors doing the right thing. A lot of good stuff here. So thank you so much.
Yeah. Thanks for having me, guys.
Yeah. Appreciate it. Well, we're definitely going to have you back. So look out for that.
Looking forward to it.
Next, last piece here. How can our listeners get a hold of PHL Capital? What's the best way? And keeping in mind, most people listening are mortgage brokers.
Yeah, that's okay. I know phone call, email, text. Our teams we've got all those channels.
Yeah,
are centralized back to us. Our job is to make sure that we've been, that they can reach us, and we're quick to respond right away. So any of those channels, go on our website, LinkedIn, however you want to get a hold of us. We're really easy to find.
Cool. Well, we'll link everything, phlcapital.com, all the, the key contacts to reach out to. And again, thanks again.
Thanks for having me, guys.
Yeah. Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2025. This remarkable organization addresses a hidden hunger issue many are unaware of in British Columbia. While school districts provide meals during school hours, numerous children face food scarcity at home, particularly during the weekends. Backpack Buddies steps in to support these vulnerable children, ensuring they have easy to prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening and see you on the next one.